Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis methods to NFLX stock to uncover the potential strength in the stock over the short and medium term. Let's take a look at the major picture. We can see that it was suffering from a major downtrend over the weekly chart, and it broke below the downtrend channel line twice. This break was always coinciding with the earnings report, showing negative reaction from the investors, and of course it declared some kind of increased negativity over the course to the downside. It also broke below two major monthly supports. The first was around 400 and the second was around 228, which is very important for us over the very short term. Things are changing lately since the stock started to move into a trading range over the medium term. Since mid-April until now, it started to use 160 area as a very strong short-term support. Let us take a look at the short-term details for more details. Here we can see that after the fall, the stock started to make a bottom around the 162 area, which is very important. Then it made two compact bottoms around this area once again during June and July. And this is called a double bottom. This is a giant double bottom. And the neckline is running through 204 resistance. This is the neckline. The thickness of this double bottom is around almost $42, let us say $40. So a decisive break through this neckline should be on increased volume, which is luckily the case, and it increased in volume. And during the days of confirmation, we can notice that the volume shrinks and almost dry volume, or at least below average, much below average volume during the days of confirmation. So it is a typical validation of the break of the double bottom. It's classical. Here is the double bottom, here is the neckline, here is the day of break, took its movement up on an exceptional high volume. The days of confirmation are on relatively low volume. So what is next? The next is an impulsive wave, which will be considered a rally towards the minimum target of this double bottom, which is the thickness of the pattern added to the 204 level, which is the neckline. So if we add 40 plus 204, so it is expected as a minimum target to reach the 244 areas as its first target over the short term, which is quite possible. The only thing that is considered as an obstacle against the rise is the monthly resistance around 228, and I expect the stock to manage to break above this level easily. So when we speak of the targets, we can see the following. First of all, 240 is the first station. I think it will be followed by two phases targeting the nearest weekly resistance around $300. It may reach more to the upside, but this requires a well-established uptrend. Maybe something like this. Maybe after it manages to verify the first target, then a kind of correction, then another rally, then another correction. This will allow us to draw an upward trend line. This upward trend line and its parallel channel line may allow the stock to target areas way above 300, but this requires long-term time frame, because we are in August and this may be in October, so it will require much more than 3 or 4 or even more than 5 months, and then it will be a very long time frame, maybe 6 months or more. So if you think of the stock reaching areas above 300, this is over long time frames. For the time being and over the short term, let us summarize everything. The stock was in a major downtrend. Then it formed a double bottom with a neckline around 204, facing monthly resistance, which is expected to be broken easily at 228. The nearest short-term target is around 244, which is not the final target, because the stock will be in a positive territory and the stock will be in a bullish environment. So it is expected, after testing its first target, to go into a correction which may use the 228 as a support or the neckline as a support. Either way, it will resume the impulsive wave to the upside, targeting the nearest weekly resistance around 300, with a potential rise of $100 approximately from the prices we are seeing right now. Approximately, because when it reaches the 300 area, there will be a kind of increased volatility during the test of the weekly resistance. That's it for NFLX. Keep in mind that your stop loss point or your safety level is around the level of 185 for the time being. It's somewhere below the neckline of the completed pattern. Please keep in mind that this can be your stop loss point if you are not conservative and you do not want to wait for far levels of support to be tested. As a guide, 185 may be your stop loss for the time being. If the stock started to gain momentum to the upside, of course it should move to the level of the neckline around 200 level. That's it for now for NFLX. Thank you for watching. Please feel free to like, share and subscribe, and see you soon.